Hi, my name is John Stevenson, the Guaranteed Retirement Guy. Today, we're going to be talking about how to create a reliable income stream for the rest of your life. Okay, so if you're retired or you're getting closer to retirement, you're probably thinking about, well, what can I get as far as income and what is reliable? Okay, that's really the biggest concern people have, is something that is reliable for long term, not just here and now, maybe next 5-10 years. Because you can put your money into dividend-paying stocks, and I love those. You can put into some pretty high dividend-paying, especially with some like real estate funds, like the REIT stocks or the REIT funds. I mean, you can get some pretty high payouts for those, but it's not guaranteed. Okay, you got some other ones like Coca-Cola, right? They've been paying dividends forever. Then you got these other companies that will pay dividends, but things change. Okay, stock market fluctuates, and income today is no guarantee of income tomorrow. So we're going to be talking about annuities and how to make sure that you have reliable income for the rest of your life. Okay, and annuities, that is what they are set up for. They are set up for guarantees. Okay, it's much like an insurance policy on your car, on your house. You buy those to protect yourself against losses. Okay, well, with annuity contracts, you're purchasing annuity contracts to protect yourself against longevity risk. Okay, you're protecting yourself against the risk of outliving your savings. Because a lot of times what people do is they'll think about the 4% withdrawal rate, and they're like, all right, if I take 4% out, as long as I get this rate of return up here on a consistent basis, then I'll never run out of money. The problem with that, of course, is that 4% withdrawal rate has been debunked several times. So it's no longer 4%, more like 2%. And of course, most of us, we think about 2%, we're like, $1 million to make 20,000? Yeah, right. Like you need more. And so a lot of us don't have $2, $3, $4, $5 million. And so usually when you're looking for higher payouts and you want guarantees, you'll look at annuities because they have much higher withdrawal rates, okay? And they're guaranteed forever. The account balance is not, but the income, and essentially it's a pension that you're purchasing, that is guaranteed for the rest of your life, okay? So I'm going to share my screen, and I want to kind of go over this a little bit with you so you can see how this works. And of course, your situation is different, your age is different. You can go to my website and check out my calculators and look at these as well. So for this example, I'm using someone in Colorado. Okay, they're 61 years old, and I am just doing a single male. Okay, if it's joint, the payout will be less depending on the age of the spouse. And a lot of people who reach out to me are married, and I highly recommend a joint payout. So we'll look at that. So $100,000. And again, this is, if you want to just time this by 10, if you got $1 million to put in, it'll give you 10 times this amount that we're looking at. Okay, if it's 500,000, it'll give you 5 times the amount. Okay, so the math is very, very easy with annuity income payouts. Okay, so if we look at this and say, all right, he's 61, he wants to take income at 66. He might take it at 67 though, but right now we'll look at it at 66. You can see all of the payouts here. Okay, lots of different companies, lots of great options. The top one though is with National Western Life, and they're a good company. They're A-, so a little bit more risky, I guess, but not really. They're an A-rated company, and they're a solid company, especially for $100,000. They're well under the State Guarantee Association's limits in Colorado. Okay, so most of the limits are around $250. So if you want to like spread your money around with different contracts, you can do that. Otherwise, you could put it in maybe a higher rated company like Athene or with North American, and you'll notice the payouts are very, very similar. So if you're thinking, oh, I want to put $400,000 in, and I want to put it in one contract, then pick Athene. Okay, Athene's a great company. They're actually known to bail out companies who are in the red. So they are very, very solid. North American, great too. They've been around for like 125 years. So you got a lot of good options here. If you want to go down even more, you've got Midland. They have one of the highest Comdex scores in the industry. And Allianz is the largest in the world. Okay, they're $3 trillion. But of course, the income's less. Okay, so I'm going to look at this and say, all right, well, what does the income look like? Well, it's just shy of $11,000 a year from $100,000. And that's if you let it sit and grow or defer for 5 years. Well, what does it look like if you wait till 67? Maybe your full retirement age for Social Security is 67. So a lot of people will elect to wait till that age to take income. And of course, with that, you can see the income is higher. In fact, it's funny. Equitrust actually beats everyone out at that point, which they're a great company. I've sold a ton of them as well. They're B++, but only with AM Best. The other two agencies have actually rated them an A. So anyways, keep that in mind. They've got good, strong momentum, and they're a solid company, especially if you're thinking about lower premium amounts, like 1 to 200, maybe 300,000. Okay, F&G, A-rated, 11,489, and then you got NWL, which was the top one, if you were to wait till 66. So payouts do change depending on the company, because some of these companies have higher payout rates in the beginning, like immediate, maybe next month, versus like 5 years versus 10 or 15 years. So, and that's because they have different withdrawal rates multiplied by different benefit values at any given point. Like a lot of times they'll have for instance, you might have a company that pays 8% roll-up rate. Okay, and that's for the purpose of taking income. And they'll have that, let's say, for 9 years. Okay, and then after that, it's gone. Then you have other ones that have a lower roll-up rate, like American Equity, and they pay 6.5%, but they do it for up to 20 years. So that's why they beat everyone out. Once you get it like deferring for 14, 15 years, they start beating everyone because they have a longer roll-up rate growth than other companies do. So anyways, it just depends on when you are thinking about taking income. So when you and I meet, if you want to talk annuities, you can book a call. There's a link below this video. It goes directly to my calendar. We'll talk about all of the top annuities, whether or not you're thinking, hey, an annuity, in the next 5 years, that's when I want to take income, or in the next 10 years, we'll look at the best products, the best contracts for that time range, just to make sure that you're in the top. Usually, if you can get the top one, great, or the top 3, that's better. A lot of times these will move around depending on how long you decide to defer it. So you can see though, look at National Western, 11,458. That's just shy of 11,562. That's nothing. That's, if you break it out monthly, it's a few bucks a month, right? So it's not huge. So again, you can see it still makes sense to keep National Western. If you were to thinking, oh, I'll take income at 66, maybe I'll do it at 67. Like you can still keep National Western. So let's say you wait all the way to 70. Okay, I don't know. Let's see how that performs. Okay, so Midland is beating everyone else out, and this is deferring for 9 years. Okay. They're followed by Nassau, as well as North American, Delaware, and Athene. Let's see, so there's National Western. They're at 14,148. So they've still risen, but you can see if you were to defer this out 9 years, you probably want to stick with Midland because it's 15,240 versus 14,148. So that's $1,000 extra in income. So what I would just caution you about is if you are absolutely sure you will defer out this long, then it's a no-brainer. Get Midland, okay? Midland will be the highest paying. And again, this is for this video, okay? You might be watching this a year from now and rates may have changed for Midland and it may be higher for another company, and that's fine. These will fluctuate, okay? And you can use my calculators. Go to johnstevenson.com. You will see the annuity calculators. The one I'm using right here, this is actually for income riders. It'll look a little differently than what you're used to as far as working on my website, but you'll still get the same numbers, okay? And also let me show you the account balance because, again, we're doing this for income, okay? We want reliable income for the rest of our life, okay? And the reason why I say that is because these are income products. They're not legacy products. So the account balance does not stick around, okay? Let me show you that. I'll show you the guaranteed values first. Again, you can see the income, same guaranteed. And again, if this is $1 million, you're going to get $152,000 in guaranteed income, okay, after 9 years. It's the same payout rate. So they're paying out 15.24%, okay? And that's off $100,000, okay? And this is deferred out 9 years, and this is based off of someone buying the contract at 61 and then deferring it out to 70. So these payout rates are different depending on the age that you buy them and the age that you take them out. So just remember that as well. But if you look at this, you say, all right, 15,240, my account balance is gone by the time I'm 75, 76. But that's if there is no index growth, and this is tied to the S&P 500. So, and they're capping it. They're not giving you all of it, but some of it. And so this is a worst case scenario. This is showing your death benefit, not your income. Your income is guaranteed. It's contractual. Again, we're looking at ways to provide reliable income for the rest of your life, okay? Not legacy. Now, if we go down here and we look at hypothetical, this is showing here's what the index has earned, after, they're only giving you a portion of the S&P, but here's what it's earned over the last, couple decades. And you can see that over time, yeah, it'll last a little bit longer. You see the account balance, but it only lasts like 3 or 4 years longer. So again, it helps with the death benefit. It's nice to have it around, but it's not something that you're buying the annuity for. You're not buying it to leave money behind. I mean, if you were to die in your early 70s, that account balance will go to your beneficiaries. Okay, so that is an absolute. So don't worry about that. But again, this is an income product. So you bought this, you spent $100,000, and if you live till 95, you've taken out almost $400,000, 4 times your principal. That's pretty good. Okay, so that's what you essentially did is you took $100,000, you purchased a $400,000 pension, and you're good. Okay, but maybe you need a higher pension. Okay, maybe you need like 5 times that amount. Okay, you put $500,000 in there. It's as simple as that. Okay, obviously 5 times that amount, you're going to get a lot more income. And you can see I could throw in, and I'll just show you the numbers. Again, it equals out exactly the same. It just multiplies it by 5. There we go. $76,200 guaranteed rest of your life. Okay, but $500,000, that's what you're going to get. You might think, well, I'm going to put in $500,000 now, and I'm going to take some income and however many years, and then I want 2 or 3 more contracts to take income later on. You can do that. And you can fund those with smaller amounts, like $100,000, $150,000, okay? That way, you can give yourself raises along the way. And if you are married and you're worried about your spouse losing half the Social Security, because maybe you guys both have equal Social Security amounts or close to it, then it could be a big hit when one of you pass away. And so it's nice to set up annuities for that as well, okay? All right, let me show you one more. I want you to see what it looks like if you were married. Okay, because a lot of you who are reaching out to me are married. And it's important to have a joint payout versus a single payout, because if you die and it's a single payout, your spouse is only going to get what's ever left in the account balance. Well, what if you've been taking income for 15, 20 years and there's nothing in the account balance? They're not going to be able to, they won't have anything, okay? And it's a much better, in my opinion, to have lower income and be able to make sure that it lasts for the life of your spouse as well. Okay. All right. So same thing, same 500,000. What was it? Like $76,000. So what is it if your spouse is the same age? Okay. We'll just keep things equal right now. Obviously, if you're me, your spouse is 4 years younger. So that means the numbers would be less, because now they're on the hook for my wife's life. She's a female and she's younger, right? So that the age absolutely is a factor. All right. So for this, you can see NASA is the winner for joint, but Midland is right behind them. And again, with $500,000, I put it in Midland just to get A+, get stronger. A+ rating, and also their Comdex score is in the upper 90s. So they're a good company. Anyways, it's like $69,000. So the difference is not a huge amount. What is it, like $120 a month? That's literally the difference. So NASA is a good company too. It's just you're taking on higher risk for just a little bit more income. Okay. So anyways, if you look at this and say, okay, that's $70,000 a year guaranteed for the rest of my life, and now my spouse's life. So you pass away in 20 years, they're not going to be able to generate, right? I'll show you. Look at the illustration here real quick. Let's say you're married, and with decent growth, you still pass away at let's say you pass away at 80, okay? And again, life expectancy for males, I believe, is around 86, 87 right now. It's gone up. Women, longer. And if you're married and in your 60s, it's almost a guarantee that one of you is going to hit like your mid-90s, like 95. Okay, so keep that in mind. So anyways, even with growth, if you were to die at 80, your wife gets nothing. Okay, so that would not be good. So you're taking $72,000 out instead of $69,000, right? So, but let's say you die earlier. Let's say you take income for only 3 years and you've got like $500,000 left. Okay. Well, you got to ask yourself, is she going to be able to take that death benefit and activate income, for herself that will equal the $69,000 that you had, or the $72,000 really that you were taking as a single? No, absolutely not. Right? You think about that, like, no, that's impossible. Like right away, no. So that's the issue that they'll have, is they will not be able to generate the same amount of income that you are generating right now with your contract. Okay. So just things to think about when you're setting things up for reliable income for retirement. Obviously, I specialize in annuities. Okay. I look at all companies, not just one or two, and commissions are all over the place. There are some companies that pay me 2% commission, some that pay me 7 or 8. Okay. But for me, it's more about being transparent and showing you everything that's available. Okay. The one thing I did not go over in this video is SPIA and DIA contracts. Okay. Those are irrevocable contracts, and they are very effective. That usually, from what I see, they don't actually provide as much income, annual income, that you would get from an income rider, but they are still helpful for other reasons. Like if you want an annuity, like, and you want to take income before age 50, okay, you would want a SPIA or a DIA contract for that, okay? If you wanted income for a non-spouse, like a child, okay, especially if your child is disabled, that would be perfect, okay? That is what you would want a SPIA or a DIA contract for. And it's very similar to like lottery, okay? You win the lottery, most of us take a lump sum, but if we were to spread it out across an annuity, that's what they do. They will annuitize it and they will pay you that amount over a certain number of years or for life. But obviously for lottery, it's for a certain number of years. Okay. It's the same thing with a DIA and a SPIA contract. Okay. You can set things up and it is absolute, and it doesn't only have to come to you and a spouse. It can come to a child. And of course, you can set it up to take income earlier than 50. There's no guarantee that you will still not, you still might have the 10% tax penalty that the IRS will charge if you take, income before 59 and a half. That is still there as sometimes it could happen with a SPIA, but there's a lot of times where it will not, where you'll avoid the tax penalty altogether. So it just depends on how it's set up, depends on the amount, depends on a lot of factors, especially as far as your age when you buy it, and the age when you take income, and the age when you die, right? Because they're based off of life expectancy. So that's a whole nother conversation, but I wanted to touch on that because at my website, johnstevenson.com, you'll see the income rider. Okay, the income rider calculator will show you the highest annual income. You'll also see the SPIA, DIA, and QLAC. QLAC for basically just deferring RMDs. Okay, but it's basically a DIA or a SPIA contract. Well, it's a DIA contract because you're deferring it, right? You're deferring your RMDs. But anyways, those are irrevocable contracts, okay? And they have their purpose. And those are there if you want to look through those and you want to calculate what it would be for a SPIA, DIA, or QLAC contract. Those are absolutely there as well. And of course, you got the MIGA contracts. Those are fixed rates. They're like CDs. So they're only for a fixed term, okay? So it's a way to take advantage of high rates for a certain amount of time, okay? So they're not bad for building legacy and having growth. But if you're looking for highest guaranteed income, usually the income rider is the way to go every time. Okay. So it just depends on you, depends on your goals, what you're looking for. Okay. So I show everything, and hopefully you feel comfortable reaching out to me. And if you do, there's a link, book a call. It's below this video. And if you want to book a call on my website, there's a page for that as well. So happy to go over your questions. I won't try to sell you anything. Of course, I'd love to sell you an annuity because that's how I make my money. But a lot of people I meet with don't buy annuities, okay? And that's fine too, okay? I'm here to help, and I'll answer your questions. Of course, I'd love to help you. If you are looking to purchase an annuity, please do book a call. So anyways, thanks again for watching. If you like, make sure you subscribe, share, comment below, and I'll do my best to answer those as quickly as possible, and look forward to seeing you next time.